Hello everybody, welcome back to the channel. Today we're doing my weekly review. This is when I go through my trade log, talk about all my trades I made, talk about what I was thinking when I was putting these on, maybe talk about what I'm looking at going forward, and then try to do like a special topic of interest. And in this one I'm going to be talking about zebras because I had to manage a couple of zebras this week, so let's jump right into it. So first off, here's a picture of the daily close snapshots. You can see I had 2 green days, 3 red days. If you add it all up for the week, so that's awesome. The progress report overview. You can see for the weekly total here, my net account went up $5,284, but I also made a pretty sizable deposit this week as well. Premium for August, I'm actually positive somehow. I actually have to thank Wish for that, actually. It's going to be interesting when I have to figure out how much I owe in taxes at the end of this year at this point, because year-to-date change is $73,000. Oh, come on, Uncle Sam. This week's trades, we'll start from Monday. Monday, I sold some 1050 calls on Wish for 30 cents each. Immediately after I sold this, I saw Wish, these calls went up to 40 cents. Like, had I waited 5 minutes, could have made an extra, what is that, $200 or so. These contracts actually expired worthless, so I made $600 by just having a covered call on this Wish position, which is pretty good money considering like nothing else happened with that position, so that was pretty nice. MFA had a dividend payout last week. Monday it dripped in and bought me some more shares. On Tuesday, I guess I was a busy man, I put on some Clorox bull zebras when Clorox was at 160. I'm looking for Clorox to get to like 170 to cash out, so be about $1,000 gain per contract here. So looking for about $2,000, and I have 2 years for this play to come out. I don't think Clorox had earnings and it dropped down to 160, and I thought that was an overreaction, so that's why I put these on. Netflix, I decided to go safer on Netflix this time and just sell a 450 put. Not too much premium, but Netflix at 450 I think is pretty safe. Just let that one burn for a while. Campbell's Soup I think was trading at 43 when I sold this. I already have 2 contracts on Campbell's Soup at 44.50, and so I decided to put on some more. Campbell's Soup decided to continue bleeding off on the week, so I think this position is actually down as well. Clorox, I also decided to put on some bull put spreads for like a more immediate return. This expires at September 10th, so was that 45 days or so, a couple weeks out. I put on 5 of those. Obviously, your max loss for this would be the difference between the spreads. So $500 per contract, 5 contracts, $2,500 potential loss if it goes really bad against me. And I got $35 for each one of those, and the commission is actually pretty small given the fact that there's actually 10 legs in there. CCL, I decided to put some puts out there. I would be happy to pick up CCL at 1750 if it dips. And it only happened if like the Delta news is like the catalyst for that to happen. So I think this is an easy $150 in my pocket. Just have to wait time for it to get there. Next up we have Wednesday. And so Wednesday I was feeling fancy and decided to sell a couple bear calls on snow. So I sold the 290, bought the 292.50. So $250 risked per trade to make $25. Not the biggest return there. I did 5 of those. And then a little bit later, I decided, you know what? That's actually a pretty risky trade, given it's snow, and snow can actually gap up pretty hard. In hindsight, this trade would have been awesome because snow actually went down, so I should have just left it. But I decided to take that off and look at other trades. So that's the great thing about options is you can turn around, change your mind, and get back out and maybe make lunch money. So actually, that paid for sushi for the day, so that was awesome. Another trade I had to do was AMD. I had a Zebra that was already on for AMD. AMD shot up after earnings, so I put on the original Zebra, and that was when AMD was sitting at 104. My price target was like 95, thinking I'd make like $950 or $1,000 from the play. AMD shot up to 121, so I went and repositioned the strikes and the legs and actually doubled down on it. So here you have another bearish Zebra play on AMD. And at the end of the video, we're going to look at this one more specifically because it's the first time that I'm going to be showing you how to manage like a zebra gone wrong kind of thing. Zoom, this is probably the trade that might be the most questionable for me. I don't usually do shorter dated contracts like this, and this was actually, well, a 2-day contract. So Zoom shot up to 393 or so, and I know that there's a buy and supply level at 400. So I decided to sell some 400, 402.50 bear calls on it. Collected $60 each on these, and I did 5 of them. And this position actually went in the money. It was even past 402.50 at some point. So like I was sitting at max loss. Thursday it actually distracted me quite a bit. I'm not gonna lie. So Friday when I was able to get out, I was able to close it quickly. Even though had I just sat on my hands, I would have made the whole $300 off this position. Instead, I came out with 127 because I did close it early Friday morning just to be done with it. Thursday, Fastly had their earnings report. They shot down drastically. I thought it was an overreaction, so I decided to sell one put. I wasn't too confident in it, so that's why I only did one put. And actually 30 was the lowest strike available to me, so that's what I went with. I sold it for 107, and I was able to close it in the afternoon for 30 cents, so nice little 70% profit off a one-day hold. Why wait till September 3rd if I already have most of the money from that trade? Another trade I did, so I'm really liking these zebras, so decided what do you use it in like a more of like a gambling kind of situation. So ride. I made a video about this ride play here, so I'm not going to talk about it too much. But my max loss on this position is 3,900, which is actually about how much I deposited, so that's kind of funny. The goal here is to basically close this out on Thursday after earnings, and hopefully we get a bump from earnings. If not, I'll probably take a small loss to get out of the position. And then I did have a deposit hit this week as well. And I didn't deposit last time, but I got a reimbursement for some purchases I got, so put that money in here too. So pretty significant lump sum, deposit right there. I don't usually get to deposit that much at one time, so that was pretty fun. And I guess there's the Zoom call that I closed. For the week, only up $100.21 in realized profits, and that's because I rolled this AMD. But when we look at this AMD play later, you see why I don't really care that I lost $726 on that play. Current positions, you can look through these. What we got here? Here we got the Wish. We sold the 2,000 shares of Wish. Next week, I'm not going to be selling a covered call. There's earnings, and it could pop, and I don't want to miss out on that gain if it does go up. If it does go down, then I miss out on a little premium, but I leave that potential for it to go up. And, Wish volatility in the past, I'm not going to cap it during earnings. Look at some of the others plays here. I mean, most of these just speak for themselves. I mean, all these leaps over here are just down. That's unfortunate, but they can go up just as fast. AMD, here's that one that I rolled to, or not rolled. I'm not even sure how you would call it. I repositioned the zebra strikes, and you can see that's already up 15.26. If we go back, I only lost 7.26 when I closed that position, and now that play is already up quite a bit, so that's nice. Costco is another zebra I have on that's going against me. I'm not as confident that Costco will go down as I was with AMD, which is why I haven't repositioned or doubled down yet. Right, that's that short-term play for next week. Yeah, those look pretty good. This Baba play, Baba went down about $6 today, so I lost $600 today. Margin ratio, this is a term you see me throw around from time to time. When I say margin ratio, all I'm talking about is the maintenance divided by net lick. That's what I go off of. 50%, if that gets to 50%, that's when I'm kind of like in like management mode, where taking off my riskier plays and stuff to lower that margin of maintenance, because 50 becomes 70 pretty quickly, 70 becomes 100 pretty quickly if stuff starts going against you. I try to aim for around being 30%. Right now I'm at 23%, been kind of low, but I also have a lot more bought option plays on right now, so 23 might be right for me because of all those bought positions I have. Those don't really count against your margin maintenance here. Next up, I'm going to talk about AMD Zebras. I'm going to pull up Thinkorswim right here and go to full screen. So let me pull that up.
If you're liking this content, go ahead and click like, subscribe, and turn on notifications so you stay up to date on any videos I put out.
Alright, so here's the original Zebra I had on AMD. It's the 103 strike and the 110 strike. And Zebra was sitting at like 121 or 122 even when I decided to close it. And the reason why I closed it is because I was still bearish on AMD. I just got in early, I thought. My price target is like actually 95 on it. So it being above 100 is ridiculous to me. Anyway, when AMD gets to 121, you can see that I'm no longer getting that $100 gain in my favor if it moves $1 in my direction. So, example, here we have, what is that, 121. If you look at the number above the mouse, 592 is my loss. If it moves $1 in my direction, I'm only down 558 now. And that's what, 34 cents in my favor for moving $1 in my direction. If we move another $1 in my direction, 523. I think that's like 39 bucks there. So for the stock moving $2 in my favor, I only made back $73. But by switching it to the new Zebra, by repositioning the strikes, a move from 121 all the way down to 119 will actually get me $176 in my pocket. So by repositioning the strikes, I get back to that delta being 0.9. So when the stock moves in my favor, I get the $100 gain in my pocket. So I can make back those losses quicker. If we switch back to the original AMD Zebra, I would have to wait to get to 109, or if you want to look at expiration date, 104 or 105 to be back at zero, be back at break even. So significant moves, 109 or 105, depending on which line you're looking at. But by switching it to the new strikes, to get back that $700, the stock only needs to get to about 113. So that's a lot better than 110. And as you can see, the pink and the blue lines are actually lined up here because like the pink line's already following the expiration date value. So that's pretty cool. Now, I decided to put on 2 because I really like the position and want to make back those losses quicker. So if you look now to get to 700, I only need the AMD to get down to 116.60 or 76 here. So because I doubled up, I make it back the cash quicker. So I've already made back that loss because AMD, I think, is sitting at 113 right now. And you saw from other pictures that I'm up overall. You combine those 2 trades now. So that's the benefit to moving your Zebra once it moves against you drastically, assuming your original thesis is still your main idea, like you still believe in it. If the movement of the stock has broken your confidence in that trade, like don't just keep moving your Zebra to hopefully make it back because you're taking losses along the way. So that's how I manage my Zebra for AMD. With that said, guys, thank you for watching, and I hope you guys had a good week. Hope you guys have a good weekend, and happy trading next week.